My name is Mayowa Adeosun. I'm a co-founder and chief operating officer at Sycamore. And what inspired me to come back to Nigeria and start Sycamore? Well, I would love to say it was something that I had like great foresight about, but to be quite frank, I graduated from school around 2010. And during that time, the economy wasn't actually so bad. It was actually, as they pitched it to me, milk and honey. So for me, I was coming to see what was going on. And when I came, things were very, pretty much okay. So it's not the same, era as the more recent administration. So with that being said, there has been challenges, but I think, with challenges, it presents opportunities. So that's what my own circumstances were at that time. Okay, so I would say, interestingly, I came immediately after my undergrad, so I didn't have much time to gain postgrads experience, work experience. But what I did learn was, I had many jobs growing up while in the UK. From salesman to selling insurance to working in a bank as just a cash teller. So that kind of just built a lot of discipline, a lot of routine, and just making sure that even the basic processes that you think might not be so important are very important. And that's what really taught me at a very young age. Okay, so what drove the changes from Sycamore starting as a peer-to-peer lending platform to its current offering? Basically, was when we started, we had to start very lean, and most financial institutions, they lend from their balance sheets, and to have a balance sheet, you need to have assets, you need to have cash, and we didn't have that as MBA students trying to start a business. So we started with a peer-to-peer lending solution, which will allow us to connect those who have, surplus or liquidity to those who needed it, hence SMEs or people in paid employment. And at the beginning, it was a fantastic idea and it was a really good start for us to get started. But what we found out was that the timing of when the funds would come in from the investor or the lender would never really match to when the SMEs needed the funds. So we ended up having to figure out how to, close that gap. So as we grew and as we developed, we had to start building our own balance sheets, and we raised some capital. But by that time, we've already proven the concept, and so investors could see that we had some traction. We had customers at that time, at least enough for investors to be interested. So where we are today now is still a kind of a mix of the peer-to-peer, but more so balance sheet lending. So we fund the transactions, but we also have investors lend on our platform, and we offer them an interest rate in return. So we've also now grown to the point of asset management. We have a microfinance banking license, so we're doing microfinance banking activities, and we plan to just do many more things. So we're becoming more of a one-stop solution for finance in Nigeria and also in the diaspora. Well, the most significant challenge that we faced launching Sycamore in Nigeria, as I've mentioned, would be just really having the capital to start, because any service that is within the financial service will typically require, it's very capital intensive, right? And we had to figure out a very creative way to get started, but without the capital. And so what we did was, thankfully, we were in the MBA program in Lagos Business School, which I think I'll speak on in more detail in the future questions. But that gave us the environment to be around people that were like-minded, people that were very entrepreneurial, people that understand the risk and return relationship. And funny enough, some of our very first investors came from our classroom. And so that was one of the ways that we were able to navigate the capital challenge and, just get us off the ground. And in fact, our very first customer on the borrowing side was a classmate too. So we found people to lend and we found someone to borrow to. So our business model was already validated before we left the classroom. Well, behind every economy, you have SMEs. I mean, SMEs represent the largest portion of employers in any economy. Um, Even though government does employ a lot of people, it's really the small businesses that employ the most people, even way more than the big companies that you think have thousands of staff. It doesn't compare to SMEs. So Sycamore empowering SMEs through financing has a direct relationship to supporting the economy. And how we measure um, our value is return or repeat customers, right? We have businesses that have been with us ever since the inception, and we've been financing their projects. They've come back to us. They love our services. They love the fact that we can turn around. And Sycamore might be one of the only places in Nigeria that you can make a request as a business for 20 million naira and get it within 48 hours. I mean, it's really that unique. If you go to a bank and ask a bank for 20 million naira, you might spend 6 months filling out paperwork. So that's the value that we add, and that's how we impact the ecosystem in Nigeria. Well, I think the first thing is to know the lay of the land, is to try and educate yourself in the regulatory environment, ask questions, speak to people who are in the industry that you're in, who have been in the industry longer than you've been, and just learn and hear what they have to say, because you can learn a lot from just networking amongst peers within your industry. So attend different conferences that your peers are going to. That will bring out a lot of information that you might need to navigate the regulatory environment. But one way that we did it is because the fintech in Nigeria at the time, this is now going to be our 6th year. We'll celebrate our anniversary in March. At the time we started, it's still very early. So therefore, there wasn't really a license that was for specifically what we were doing, what was like peer-to-peer lending. But what we learned is that most of our competitors or counterparts in the industry were using licenses like microfinance banking licenses, or they had financial institution licenses or asset management licenses. So basically just acquiring as many financial licenses as possible. And these things are very costly, and they take a lot of time, especially if you're starting from scratch. So we spent the last 2 years just trying to solve the licensing issue, right? Just make sure that we are on the right side of the regulatory, right side of the regulators, rather, excuse me. And that has been a really challenging experience. But thankfully today, we do have the licenses, the asset management license and the microfinance banking license. But we started with the cooperative license, which was a very easy license to acquire. Didn't take much time, and there wasn't too much stress. So for the BAME founders, what I would suggest is just that, again, network, connect with your colleagues and people in your industry, find out which licenses apply to you, and start as early as possible. As soon as it becomes clear which license that you need, start as early as possible. And even if you need to raise funds for the license, that is a valid reason for raising funds, because it will just help you navigate your business and your industry much easier once you have the license under your belt. Okay, so for me, I think the MBA played a very critical part of my entrepreneurial journey. for one. And you know, basically, this is where I actually met my co-founders, so I have to owe my MBA at least to that. And I mean, aside that, the information, the exposure, and just the rigor of the program kind of prepared me to just really be able to handle challenges, because the MBA will throw so much, different materials at you, scenarios and problems that you have to think through. And as an entrepreneur, you need to be able to handle that, because that's going to be pretty much your daily experience for the first, few years, just trying to navigate everything, make sense of everything. So the MBA can prepare you mentally for that kind of a rigorous experience. Um, the the other thing about the MBA is, again, it's just the network. You're going to an MBA to network. The academics is definitely an important aspect, but the real value in an MBA are the people that you meet, the facilitators, the stakeholders, even from like the cooks and the cleaners. They give you a real perspective of what life would be like after the MBA. You can learn a lot from everyone in that environment. So I would definitely encourage anyone who's thinking about an MBA to pursue it. But I would also say that it is not compulsory. It's not everyone that goes to an MBA will become an entrepreneur, and it's not every entrepreneur that has an MBA, but it does help. It does help to prepare you for the future. It does help you to just be ready for any challenge that comes your way. So it does have value. Yeah, good question. So I think being unique, or being a person of minority ethnicity, is something that actually can be used as um, a platform to help you understand the unique experiences of other minorities in these communities, right? So, as an entrepreneur, obviously everybody would love to have millions of customers, but the truth is that you can start a successful business with 100 customers, with 50 customers, with 20 customers. It really depends on the value that you're offering and how much you're able to charge for it. But understanding the unique experience of Black and Asian minorities and ethnic minorities in Scotland would give you a unique perspective that you can now channel to find products and services that can help you to, add value. And obviously that would help you to exchange for a potential successful business. So a business model that speaks to your unique challenges and perspectives is something that you can definitely key into. And that's really the goal of any business. Yeah, so the advice I would give to BAME founders in Scotland, about leveraging a diverse team and skill sets. If I use my own as an example, I have two co-founders, and the three of us are very, very much diverse. One is in the consulting background, one came with industry experience in the financial lending space, and I had the underwriting and the risk and credit analysis backgrounds, right? So from insurance. And then also we had different lived experiences. So I mean, I obviously grew up in the UK and schooled in US. My co-founders have, they at the time of the MBA program that we launched the business, one was schooling in Spain, one was schooling in France. So we've had a very much different worldview and lived experience, and that really gave us value and helped us to, once combining those experiences, to see things from all different sides and perspectives. So having a diverse co-founding or a diverse set of co-founders come together can always add value, because you're seeing things from different perspectives and you're able to, speak to your customer and grow it from that way. So I think that can help. Yeah, so there are many opportunities for collaboration between African fintech companies or startups and businesses or startups in Scotland. And I think the reason that is because, Africa, Nigeria specifically, in this particular time that we're in, we're seeing a lot of people move or migrate to other countries, especially Scotland is a destination. And what that means is that there are services that speak to those in the diaspora. And the fintech industry here in Nigeria is growing and it's very much developed, it's very competitive. But what we could do in the future is collaborate with businesses in Scotland to find out how we can better serve Nigerians or Africans that are living all around the world, and they need services, they need finance, they need shelter, they need clothes, they need all different types of services. They need education. That's what they do need. So businesses that can partner with fintechs in Nigeria or in Africa, we can create new products and services and add value to minorities. I mean, that's just from Africa. There's also Asia. There's all around the world. So wherever you find minority groups, there's opportunities for those type of collaborations. I think that's the future. I think that's the way forward. Yeah. Um, I think when you're when you're adapting or when you're trying to adapt models from other markets to your local markets, it can be quite challenging, because a lot of the times it's never going to be a perfect fit, right? Because every market has its own uniqueness or characteristic. So you need to keep that in consideration when adopting markets or models into your market. However, with that being said, people around the world, they all need basic things. We all need shelter, we all need food, we all need finance, and so on and so forth. So if something is work in one market, it might need slight adjusting for it to fit into your market, but you can do the work necessary to find out what exactly are the adjustments that need to be made for that model to fit, right? And that is actually even how Sycamore started as well, because we were looking at financing models from other markets like in the US and the UK, and peer-to-peer lending at that time was a very popular, business model. But we thought, how can we fit that in the local context within the local markets? So we had to spend a lot of time, trying to adjust it, twist it, asking questions, and you're only really going to find answers once you start. You can do all the analysis, you can do all the calculations, but it's really once you start and you go out and start speaking to your customer that you start to find the answers to the solution. I think that that can help.